Okay, good morning, everyone, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, October 17th. Good to be with you guys this morning. DJJ, we got all the pizza in the house today. Pooja, great to see you guys this morning. Feeling a little under the weather, so excuse my voice. I think I caught whatever my daughter had, so I'm going to try and make it through today. Lots to discuss as we wrap up the week. Sorry about the webinar on Tuesday, guys. Had a missed schedule there. But in any event, on the webinar or on the schedule for today, we'll hit the DXY, obviously, big move to the downside here. Euro, Aussie, beautiful move. Kiwi, beautiful move. Dollar Swiss, beautiful move. All of last night's setups all hit. So we're in good positioning there. Dollar CAD, gold. We'll cover sterling. I'm not touching it, guys, but the levels are clean, okay? And we'll cover SPX here for Pete. I got you on that one, man. Look, just real quick, because the SPX is moving right now. Here's what it looks like. Just watch out. The advance still is hitting that 3005 target, which is, again, just I think it's the open from one of those weeks in September that continued to give us a decent pivot. Basically, what we're looking at for resistance right now. Any higher from here, you're looking for the record high day close. But watch this region of near-term resistance. Okay, so let's dive right in. Excuse me, Pooja saying long Kiwi. Okay, 62.77. Okay, yeah, we'll hit Kiwi for sure. I still like it. Love where it turned from both Kiwi and Aussie. So real quick look at DXY. Here's the weekly charts, guys. Y'all have seen this before. I just want to highlight that basic trendline support is now in view from 2018 lows, and we're looking for the weekly close. That's what's going to be critical here. A weekly close below this would be the first break of uptrend support for DXY this year. Think about that for a minute. We've been talking about DXY topping. We've been talking about DXY or dollar just finding resistance at this near longer term upslope resistance. And till now, it still hasn't broken any uptrend support of any magnitude. So this week's close will be critical. Watch tomorrow. I want to see price travel through this, give us the break. If it doesn't, you're at risk for another rebound early next week. But that's really the focus from the longer term picture, 1,000 feet up here on DXY. Dollar on the daily looks like this. So it looks like we're in this pitchfork. Looks like that's the downside break. Again, today's close will be important. If we fail or if we close above 97.71 on the near term, daily close basis, I would expect some sort of near-term recovery. Near-term resistance at this point, watch 98.22. That'd be a great hold if we do get it. But long story short, you're at support. You traveled through support in overnight trade, but you're still there now. Here's the intraday chart. Okay, 97.71, even on a 2-hour close basis, couldn't make the concrete close below. So look, you're at a point of hesitation. You could see some back and forth here. Bearish below 98.22. Next downside target's 97.30, 97.21 on the index. But even on a slope basis, this is a new parallel, okay, of the same gradient extended off that low. Looks like we could be coming into some trouble here as well. So longer story, want to adjust that retracement. Everything looks good, okay. Get rid of that 236. Get the 50. There we go. That's your sort of breakout zone. It's a breach of the opening range highs as well for the week. And the next downside target is down here. So nice moves on the index, but you're coming into an area of support, again, on this drop immediately. So watch for a resistance near 98.22. Still liking the downside here with a break lower, looking for 97.31. If we pop 98.22, guys, I don't foresee that, but if we do if it does breach, let it sit aside for a while. You're looking at that point for a possible larger recovery. I still wouldn't want to get on the sort of resumption phase, but I wouldn't really want to mess with it. So hey, Iman, great to see you. Says, hey, Michael, sorry for the continuous late, but I'm on track with you. Hope all is well, all is okay. No worries, man. Great to see you in the room. We're just talking about DXY here. So any questions or question you know issues on this, let me know. Feel free to drop them in the message board. Little hesitant here. Little hesitant here. Could see some back and forth, back and fill rather. But man, we are all focused on this. It's all about whether we're able to close this or not on the weekly close basis. Absolutely critical. You got a 3-point touch. Big stuff here. All right. So that's DXY. Number 2, Euro. 1106 was the level that we were talking about last night. And we've essentially taken it out. So no change, by the way, to any of the DXY levels that we've been covering from earlier in the week. Okay, we've simply broken down. We're sitting here now. We're sitting here now. This is big. Okay, so watch this support structure near term into the open of US trade. Here's last night's update. Euro. So the focus for Euro on the weekly chart will be whether we can close 1106. That was my last target on the upside. It was the swing low from May, but it's also, just a decent pivot in price on the back of the breakout of this trend line. Unlike DXY, which hasn't necessarily broken any uptrend support, Euro has broken downtrend resistance. And that's a divergence. That's a what is it called? Non-confirmation high, right? Or non-confirmation reversal that you see a lot at turns, on larger, more major turns. So the downside break that we saw of that trend line from June has me looking higher. This is the first level. Second level is 112 essentially. It's the 112 handle. 1186 is the 618. It's a longer term 618 of the advance for 2018. So it's a little dated, but you've seen some major clean pivots in price. It's kind of foolish not to look at it. 1206 or 1208 rather is the 618 of this near term drop. So it's the operable retracement of this move. That gives you a range of about 15, 20 pips, really nice zone, really nice pivot, former yearly opening range lows as far as I'm concerned. Big zone, okay? So you got two levels of interest, about 100 pips away, 111.06 and let's just say 112.08. Those are your next two big side targets. So on a weekly basis, again, very similar to the DXY, if we don't close above this, you risk some kickback early next week. At the end of the day, it's still constructive. Still constructive. Here's the intraday chart, or here's the daily chart first. So there it is again, 111.06, 111.07. There's that swing low. This is a basic channel, okay? It's parallel basic channel support. It's a 3-point touch at this point, extended off that high from October, from the October opening range. And here we are. Struggling to get through. Could see some more back and forth. Again, stays constructive at this point while above 110.30. Near-term support 110.60. And topside targets. Watch this zone here. Okay, obviously it's determinant on time, guys. So if we're talking about today, that comes in more close or closer to that 618. You're looking at like 111.75, just higher as 111.85. That's the 618 for that 2018 advance. So just keep those levels in mind, a little bit ahead of that major key 112 region. You have this zone here, basic slope 111.75, let's call it, and then that's 618. Near-term support 110.60, bullish inval is going to be right here. It's the weekly open. It's 110.30. Here's what it looks like on the intraday. So because of the significance of that 111.07 or 111.06 region, that's kind of where my last target was. Here's the pop through. Again, if we hold this slope on the pullback today, like intraday heading into the US Open like now, this thing could continue to launch. Your next soft targets, 111.67 is what I had on the report. That's the swing high from here. Actually, it's the actual swing low from that August monthly opening range play. But at the end of the day, it was also caught that high that we made later in the month. So 111.67, we just eyed 111.70s, guys, right? Which is this. So you get the picture. You get the picture on the upside. If you're not already long, there's nothing to do here. There's nothing to do here. If you're holding longs from anything sub 110.80, I'd have a little off the table. I mean, I'm out at 111.06, but I'd take a little off the table here. Stops to break even, if not just below that swing low. Next upside targets 67 and 86. Remember, a breach of uptrend resistance can often be the sharpest part of the move. So if this is legit and we come into the US Open and we find support back at slope resistance, expect this thing to rip. Expect this thing to rip. Now, obviously on the like fundamental side or that front, you have no data from the US. There's not really much on tap into the close of the week, but you have so much going on with regards to trade agreements, all this stuff going on at this point. Also, you have Brexit going on. We seem to have some sort of deal in the works there. Sterling ripped, so you're getting some, excessive dollar losses on that front as well. Long story short, I'm judging or trying to gauge this breakout. If we head into the U.S. session and we duck back below the parallel, man, I think you'd get a deeper pullback, an opportunity to buy again if we get it, but I wouldn't want to chase. Okay, so just be cautious if you're not holding any trades and you missed this move. I know you're frustrated probably right now, but don't jump into anything just yet. If you are holding the move, I would leave a little on the table. Okay, I'd leave a little on the table. I'm kind of regretting getting all out, but if you have a decent entry, watch for stabilization in euro into the U.S. Open. If it holds support or former resistance here, turn support, expect next upside targets at 1167, 1180. All right. Kind of a runaway trade from here, so don't chase. Questions on euro? I was long at 109.93 since 2 days ago, closed half at 110.90. Nice. And left the rest. Amen. Nice play. Well done. Yeah, so I would keep a little, again, I can't tell you specifically what to do, but from my standpoint, yeah, I'd have a little left on the table. If we're able, like I said, it's all about the US Open right now. If we're able to stabilize above, it's a breakout of uptrend resistance. Keep on, you know? But if it starts to duck back below this parallel, things will get a little shaky for me. All right, nice trade on that one. Any questions on euro before we move off into the juicy stuff, which actually was phenomenal last night, and those were the commodity currencies. Let's start off with Aussie. You guys know, me and Aussie. This is the trade, the pair that I've traded most probably in my career over the last 16 years. This is it gets messy though, right? And we talked about how Aussie was really messy, specifically when you look at this from the longer term charts. What was that? You kind of broke back. We talked about 68.27, 68.54 for months, right? That's the 2016 low and the 2016 low we close. We held support there, big rebound there, the break saw an accelerated drop there. Then this happened. And it was like, well, what the hell is this? Broke down again, failed right at the lows, 66.77 held like a charm. Here's the test. Here's the test again of this zone. I don't know if this zone has lost efficacy, guys. September kind of roundabout there really threw me off, but still looking for something here. If we get through 68.55 on a closed basis, I said it before and then we failed here, but that's still sort of my zone of breakout potential in the Aussie. You got decent divergence on that last low in price as you broke lower. Let's see what happens. So this is all to say the weekly chart isn't still all that sexy right now, right? It's still kind of like, well, your range, right? Could be a bottoming, but range. The near term charts are what look phenomenal. And here's Aussie on the daily chart. Okay, this is a pitchfork that we've been following. You guys have seen this before from the 2017, 2018 highs. Really nice moves along the parallel there on the downside. Here's your first break of downtrend resistance, essentially, right? For the month. It's the 618 retracement of last month's range, which is the decline off the September high. It's the opening range high for the month. Here's your 11th. You marked a high right there at 68.09. And here's the breakout of also the median line. Now, the median line here obviously has been messy. You've had a couple of sail throughs on both sides, but you get the picture. You're starting to push the limit. There's a swing low from back here in 2016, which is what we're looking at 68.27 again. And then there's basic channel resistance. So if you take a parallel of that low, move it to the upside, we're basically there. So beautiful breakout. You're heading into the first sort of zone of, again, looking for some sort of reaction up here. Here's what it looks like on the intraday charts. Super, super clean. This thing faked us out earlier in the week. We talked about the fact that we broke that downside. Again, guys, the link is always provided for you for the previous update. It's going to take you exactly to where it is in the update too. So use these resources wisely. But here's the pitchfork as it looked on the 15th. We were looking for a zone here, and we even said, even if it spikes down into 67.24. What's 67.24? Well, 67.24 was the 618 retracement of the advance and the September open. It's exactly where it bottomed. So we false break of the downside of the channel right as we're hitting target at 67.24, which was supposed to be our entry. If you're following up with the update, you got an outside reversal candle right off that, right through back above 67.45. Last night we were trading right below this basic channel. And I even told you guys, if we get some kickback, it's okay, but we're basically looking for that low to register, to confirm the low. And what better to confirm the low than a breach of the weekly opening range highs, and that's what we've done. So we've taken out the 67.84 target. That was the weekly open. This was a big zone for me, 68.09, 68.13, 100% extension, 618 retracement, my favorite Fibonacci confluence zone. So here's the breach and acceleration. Look, if it holds this right into the US Open, it's still constructive. Your next upside target, 68.47. If we break back below this, things start to get hairy, okay? Because you have the weekly opening range right here at 68. That's kind of my limit. I don't want anything deeper than 68 if there's more upside on this stretch, okay? So we're going to choke that up to here. We're going to just chalk it up to the median line, and we're going to leave the weekly open essentially as bullish inval at this point. Okay, so if 67.88, you see anything sub 68 down into the 67.90 region, especially if we settle there tomorrow, would certainly be problematic, concerning for me. Anything else? Any questions on Aussie? It's one of those trades again where very similar to Euro. If you're holding some, wrap it up, take a little off the table, bring your stops up to break even or better. If you're looking for new opportunities in Aussie, this is what I would say. Watch for possible exhaustion near 68.46. If we push higher, we stretch into that 786 retracement. Keep in mind where we are in the daily chart, right? I would expect to see some exhaustion. You could probably play a decent short scalp just on the downside off an exhaustion high there. Ultimately, we would still want to buy the pullback. And on a weekly basis, let's watch to see what happens into this zone. 68.55 is sort of the clearance zone for me if we get above that, but we want to see that on close basis. That's above this zone. Any questions, comments, concerns on Aussie? Great trade. Worked out real well. Kiwi worked out even better. We'll hit that in a second. Any questions on this? Going once, going twice. Here's New Zealand dollar. So Kiwi was coming into a very similar scenario, only it had gotten a deeper probe of downtrend support. So remember, Aussie came right into that channel. It was like clockwork. This is just a parallel. We rebounded right off that channel higher. Kiwi got a little more aggressive. It came into the descending slope and it broke lower. It tested the low day close, but the reversal, the momentum signature seemed much stronger. So here's the reversal that we saw yesterday. We were trading right under the median line into the open of Asia trade, or ahead of the Asia open. We said constructive above 62.60, looking for a topside breach, 63 10 first target, 63.28 first target. This is a big zone. 63.47, 63.57, huge. Here's Kiwi now. We're basically testing the upper bounds of downtrend resistance. So 63.28 was the last target that we just talked about. Here's the upper parallel holding resistance. This is the breakout zone. This is the breakout zone. So this is what we need to clear not only former highs, the monthly opening range highs, the former swing highs they made in late September, but also downtrend resistance. So everything's coming against some pretty big levels. The one thing I would note about Aussie is also or Kiwi, unlike Aussie, which broke its weekly opening range highs, Kiwi's testing its opening range highs right now. Okay, that's your weekly open. And guys, I always marker this for this reason, so you can quickly eye this out. The vertical line is always going to give you your weekly open. On the intraday charts, your monthly open on the daily charts. But just to give you a figure of where we are since the week, we're basically unchanged, literally on the week. So Aussie gave us a little bit more of a conviction reversal because it broke the opening range highs of its session. Kiwi has not. Okay, what does that mean? Two things. It means there's room for Kiwi to catch up. If in fact we have put in a more significant low, if in fact we are heading higher, this thing's got some room. Also leaves the risk, that non-confirmation high again, of a little bit of a exhaustion trade in both of them at this point. Puja noting 63.63 and 63.96 as your take profits. Those are your targets on that trade, Puja. Let me ask you a question. What do you got? What do you got at 63.96? Is that a pivot? Monthly pivot. I got it. It's sickening. I can almost eye those out without even bringing them on the board. So Pooja is a big pivot trader. She loves using the monthly pivots. So that's a level that's coming up. You know what? If we break 63.56, I'm with you. I got no problem with anything. I mean, I think there's room, in my opinion, even higher, but I'm with you. 63.97 is the 786 retracement, right? So we're close. We're close. This is the pivot for me. This is the huge pivot for me. So what does it mean for Kiwi moving forward? You got a huge move last night, nice breakout, everything's looking clean, but you're testing near-term slope resistance. So possible pullback gives you 63.10 as resistance again, or support. That's the 618 of the drop from last week's high still. So we're still in that operable range. Would you play this short? That's a good question. I wouldn't. Well, here's the thing. If you're going to play a pullback, okay, I would offset it with some sort of, synthetic hedge on this, but this would be right here. Yeah, it would be some sort of kickback towards 63.10. I mean, you're cutting it real close. You're talking about 18, 20 pips, but that could be a setup. Just note that you're playing basically against the daily trend. So light on the way down, heavy on the way up. Bullish inval I bring up to 62.80s is right here. If we get back below the median line, you get back below those pivots last week's low, you're probably in trouble again. I wouldn't want to mess with it. But that's like dire scenario. If we get that low, I think we're in trouble already. I want to see support ideally here, if not here, along that gradient, the 50 line for the upslope or the 25% line, like right here. All right. And you'll get more clarity as this thing goes. So for example, if we push it a little higher into the US trade session, then fail, quickly tack on a retracement. See where the 38.2 comes in. I bet you, even at this point, it'll come in right around that level. Boom. Pretty close, right? but I don't have any way of working with this as a registered high. That's a complete assumption and a foolish one at my part. So you would want to see some reversal patterns. You'd want to see, a doji, some sort of formation to give you that tell, at least on the near term, to use that kind of formation. But does that make sense? All right, cool. That's Kiwi dollar. Any questions on Kiwi and Aussie? Both phenomenal plays last night. Asia paying off nicely, and you're getting a nice little pop here as dollar drops. Last but not least, on this front from last night's update, you guys remember this old setup? We talked about this thing for weeks. You can go back and click over the next, like literally the last 4 setups, guys, and it's the same thing. This thing was drifting, drifting, drifting. Our big assumption, our big play, our big tell was we came into 10016 to 618 of the yearly range, and it held. We've been trying to play a short on this thing ever since. Every time we try to take the short, starts to chalk up, and then it just quickly comes back, reverses, and doesn't break higher, just sits in the range. Right? I've had a couple break evens just because I'm bored. It won't budge. Finally got the move last night. Here's what we were looking for. Basic trendline support off last month's low, okay, was right there. A basic weekly opening range, okay? If you ever have your doubts about weekly opening ranges, here's one in play, cherry picked for you. Here's the weekly open. You set a low, you set a high. We were sitting at the lows, confluent support with that slope, and then you had the 50% retracement just lower at 99.35. And I told you guys, well, if we break this, that would be, for me, validation of the weekly opening range break. You're looking for 99.14, 98.87, and yes, 98.70. It seemed like a stretch, but that's 100 off the high, so that's 2 equal legs. Look at this thing. Look at this thing. Pretty close. Pretty close. Okay. The break below 99.35 did see the move that we wanted. We broke below it. We tried to break back above, tried to break back above, tried to break back above. Failure every time. First target 99.14, 618, sailed right through it. Here's the second target at 98.87. If we get the extended push, and again, this is coming into the US Open, same deal. You're at the first or on this case, this is the third target or second target of the breakdown. Kind of want to use some caution here, but you're looking essentially for 98.73. Near-term resistance, 98.14. At this point, bearish inval, 99.35. Okay, looks good. Looks good. That slope resistance right into the start of the week on the second touch there, for me was telling, because we've worked with a couple of different slopes on Swissy that didn't quite fit. Here's a really nice one. The median line is just lower. If you're holding shorts on this, I wouldn't even, let me take a step back. 98.87 is definitely something you want to take a little off, but they have the median line just lower at 98.80 and then 100% 98.70. So watch the next 15 pips on the downside, okay? The reason I would really caution people from trying to jump out of a trade if you're holding this short is just because of where momentum is. When this thing is here in oversold territory on the way down, then tends to be really nice. Tends to be really nice. By the way, Kiwi just completed 100% extension off the low. If we don't break above the US session, risk for failure is high, I think. Says Pooja. You're talking about this. You know what, Pooja? That's really clever. So it depends how you draw it. The proper extension, I have a little bit higher, Pooja, at 63.45. Okay, remember not to use this high, low, high because the low registered first and then the high. So you have to take this secondary high. It's easier just to zoom out sometimes when you're doing that extension. Okay, the first actual stretch high is here. So if you take an extension from like this, these reference points, yeah, I mean, it's not gonna work. Have it a little bit higher, 63.45. So I would agree with you. Even if we spike into that region, then fail, that would be a screaming exhaustion trade. But even then, it'd be near term. Even then, it'd be near term. Watch this region. I mean, aside from anything, it's at the 100. It's at the weekly opening range high. I try to take a step back and think always as objective as possible, guys. And since the start of the week, this is high as we've been. We're just testing those highs. So yes, it is a region of which we should see inflection of some point. If it, it's either failure here into the U.S. Open, or if it breaches, you should see an accelerated move. And your top side targets are pretty clear at 60. Watch 63.45, but it's right. It's 2 pips away from that 63.47 target we've been watching. So just a little tidbit there. Pooja says, "Okay, thanks. Hey, thank you for bringing it up. Yeah, it's worth another look, sure." So that's a quick recap on Kiwi again. Anything on Swissy, guys? Any questions on this trade? Here's a daily chart. That's not a break. I don't know what is. So it's your first move. It's a 38.2 retracement. You know what I mean? So you could get a little bit of kickback, sure. Hundreds a little bit deeper, but even if it rallies, it's a break of uptrend support. With momentum, I mean, this is another like perfect. You can make a lesson out of this. We always talk about momentum signature and trying to gauge what the broader signature is saying. And even on this whole rally off the August low, you can see that momentum is failing at 60 on multiple attempts. You got divergence into the last highs there. Here's the break, right? Here's the break. Watch today's close on the U.S. Side for where we close in relation to 98.86. If we close at or above, watch a little bit of kickback. You'd want to find resistance pretty close, 99.14, 99.35, both regions of interest. All right, that is dollar Swiss. Beautiful moves across the com block, Aussie, Kiwi, and not a commodity currency, but Swissy as well. Here's dollar CAD. Despite all of this excitement, all of this moves going on, dollar CAD is just moseying on down. Okay, this thing has been a snooze fest. We had a really clean weekly opening range. That looks like it's broken finally. We're coming in support. It's a slow grinder. It's just giving me the irks. That's really, really irking me. So I haven't been touching dollar CAD, but the levels have been clean. Okay, there's really not much to say here. Here's what the dollar CAD setup looked like earlier in the week as we were opening up. 32, what was that? 32.38 and 32.80 are levels that we noted early in the week as sort of where we were looking for possible possible resistance. Here's what it looked like on the 13th, right? As we opened up the week, these are levels we're looking for possible exhaustion. The 38.2 ended up holding. So we came right into that, pulled back. Here's the break. Okay. So we're testing 31.55 now, head of target or head of, time. And I don't know what to do here. Like this is sort of a big zone of support. I didn't take the short, so if you're holding shorts, this is somewhere you want to, clean it up a little bit. And if it's going to fail and rebound, it's also the spot to which to look for the recovery. I'm looking for inflection off 31.45, 31.55. Ideal scenario. Well, first of all, let me say I favor the downside break. Ideal scenario, you get some sort of bounce here, failure at or ahead of the weekly open, and then it plummets. But we need some momentum to gain wage here just to get this thing going. I guess it's a decent move. I guess I look at it comparatively to Aussie and Kiwi, which saw those massive outstretched days, a little bit more exciting. So for this, I guess it's a decent move, but like I said, comparatively speaking, it's minimal, but it's right into a support zone that I don't really want to mess with. So I either want to settle, close below 31.45, and I'm good to go. We'll sell rallies. Ultimately, again, I think you're at risk here for a little bit of a rebound, a little bit of a bounce. It's dollar CAD, guys. This is what dollar CAD does, back and forth, back and forth, back and forth, back and forth. I'd be surprised if this just breaks through and continues. So I favor the downside break, but I just think it's not going to make it on this stretch. So bottom line, look for some inflection here. Look for a zone or off this zone, 31.45, 31.55. I want to see a daily close below to confirm the break. If we do rebound, look for failure ahead of the weekly open if it's going to move lower still at 32. A little bit more tricky, considering we saw such clean moves in Aussie and Kiwi. It's been a little bit more tricky here. And then again, at the same time, like, well, is that a break of the formation? Like, what is that? Should we scratch this now? You can try to fiddle with it and get a different high in place. Maybe that works better. I was looking at that this morning. Kind of throws that 38.2 off though, or that 25% off though. So it's just, we'll leave it at this. We'll leave it at this. Bottom line, whatever way we draw this, it continues to highlight the fact that if we break below this zone, we should see an accelerated drop. Next downside target's basically at 31. And that is dollar CAD. If I'm not mistaken, yeah, we're clean on any data tomorrow, even from dollar CAD. Okay. So let's hit the last update from this week where we covered gold, sterling, and SPX. So where are we at here? Here's gold. Consolidation is not quite the word, but that is what's happening. Listen, I dropped that pitchfork. It got a little messy. We kind of probed the lower parallel. It was actually still pretty clean. It's just this part right now seems to be drifting out of it, and it doesn't look very, very clean as far as a breakout's concerned. So just for the sake of clarity, it's the same pitchfork on the larger scale. This one, I just got rid of this. I just got rid of this smaller one. Levels are the same though, okay? So we came back, we set a really clean weekly opening range here. We came back, pivoted back above the weekly open. We're sitting on that right now. We're essentially just slightly higher on the week, but the same levels are highlighted. Resistance at 1496, that's the breakout zone. Support at this point, the highlighted confluence zone as far as slope is concerned is like 1180, but the major key support is still gonna be a break below the October open, which is 1472. So listen, it's gonna give us a directional break in one way or another. I'm getting the sense just from the way price action has been panning out that probably gonna see a topside breach here and a rally and a rip and then a failure again is my ideal scenario if you put a pistol to my head. And that's just because of the way this thing is kind of like bottling up. So long story short, look for a break of the weekly opening range. It is a consolidation pattern, depending on how you look at it, but I'm going to still keep 1496 as sort of my near-term breakout zone. If we breach that, you're looking for 15. That would be a 618. But even if, you still want to look for failure there and a move lower. So that's the idea. Again, gold on the weekly chart, well, it's not so surprising. Where we are if we do see a little bit of recovery. We're in no man's land, to be honest with you, but the whole emphasis is the fact that we've come off this big resistance zone, right? Now, was that the second low? Was that a lower low? Yeah, kind of pitiful, right? So be careful. There's just so much geopolitical risk, so much like headlines that I just feel that even if we're on point with this, like people might just rush into it if some major headline comes out about some stupid stuff. Whether it's the Middle East or trade talks or whatever. Here's the long and short of it is you got to wait for this consolidation break. Got to wait for this consolidation break. Ideal scenario, it spikes higher, okay? Maybe even tags 1502 and then fails. And if we do that on a daily close basis, like if we spike up into here and close back below, yeah, I'd fade the hell out of that. And you look for the move lower. Anything settling above this on a daily close basis, it's just an objective break of the weekly opening range. We have to respect that scenario if we get it. So not as quite conviction today, guys, on gold. Sorry, as I usually am. But it's a simple trade. It's just that it could go either way. It could go either way. All right. Secondly, sterling. So obviously the news is continuing to disseminate out throughout the course of the day. Be careful if you're trading this. The last upside level we talked about, the last target was 28.18, 28.38. It's been taken out, guys. That's why I say sterling's off the table. We're done from here. Here's sterling, right? From the 14th. Near-term support we had at 125. Okay, we were looking for a bigger recovery to eventually get the buy on, and topside target 27.54. Last target 28.18 into 28.37. That's where we're trading now. So look here. Here's the long and short of it. It's a high-risk trade. You're at a big, big resistance zone. Remember, my favorite Fibonacci confluence is 100 off the low, a 618 off the high doesn't get more significant from my standpoint on a technical basis as a Fibonacci trader. This is as sweet as it gets as far as spots. And for those of you who've been with me for years, you know I point this out everywhere I can. Whenever those confluence regions, I'm always paying attention, specifically on this 100, 618. So look, the fact that yesterday closed right there, okay, has me paying attention to failure. I'm not bearish, Sterling, but there's failure here. It's not going to just go in a linear straight. I mean, it could, obviously, Brexit talks, whatever, but from a trading standpoint, on a stretch like this, even on an outstretch where the intraday levels get way beyond, the close is everything, is more paramount here than anywhere else. So if we fail and close below 28.18 or even in the 28.18, 28.38 range, guys, I would be looking for exhaustion, 100%. Near-term targets, 26.70, I wouldn't really stress. Let's drop that. It was a decent pivot on the way up. You can see resistance, break, and then support. But, you know, at this point, a couple of different fibs I'll look at. This is messy. Just bear with me. I just want to see what this looks like. Yeah, right on. There we go. Just some levels of reference, okay? And there's a lot of lines here. Don't freak out. There's let me get rid of this. Is way far out. This is your monthly open. You want to pay attention. 38.2 confluence 618. At 38.2. Okay. Yeah, watch this here. Watch this here. So 27.54 is still a level I'll look at. That's the objective yearly open. It's stupid not to look at it. So just watch that level as your near-term support. You've obviously seen pivot in price there. Specifically, if we close below this, you have upslope resistance being invalidated again, or at least broken, flipped back below, and you're back below the yearly open. Objectively, that would be looking lower near term, okay? 28.60, 26.86 would be like a level I'd be looking for of interest, and even 25.96, just below 26, would be areas of which you'd look for exhaustion for the reentry. If the breakout is legit, and this is just going to be a hesitation, we should see failure here, okay, before the next leg higher. And beyond here, I mean, we have to bring up the targets. Here's a 786. Here's the high day close. Oh, we already noted that. 33.10. Okay. What was that? 129.90. Hmm. Interesting. Okay, you see some pivots down here along that, but um, whatever. Let's have it on there. Let's just see what it looks like. All right, just watch that there, since we've already reacted off it. But you get the picture. You get the picture. Big move on pound here. Beautiful breakout. Beautiful breakout. Pound is now, okay, for the first time since May, positive on the year. Go figure, right? Go figure. Put that in the headlines for a little bit. All right, that's British pound. Any questions on sterling? Number 7, number 8, number 9. Pete, sorry to make you wait, buddy. Here's SPX. So, what can I say about this trade? We've been pretty decent on it. There's no momentum over the last couple of days. I personally thought this pullback off this slope was going to be greater. I thought you were going to get a deeper, nice push. You also had, like, again, really weak reference points, but divergence into a slope. I thought this was going to give us a bigger kickback, at least down till 29.80. Didn't get it. Failed right ahead of it. So here we are back at the highs again on a third reference point of divergence. Look, it's testing. It's testy. I don't really have a strong inclination of what to do. All I do know is I do not want to jump into fresh longs. If you're holding along, 30.05 was a target. Okay. It didn't hit back here. It just hit now. So you should be doing something. Okay. Um, and you're at uptrend resistance on the near term. So treat that as you will, Pete. I'm much more skeptical of SPX like now than earlier in the week, and some of the setups and some of the trades that we've had on this before. It worked. It was amazing throughout this decline. Even the breakout was clean. But now it's like, well, I kind of think, again, if you put a pistol to my head, yeah, I think this thing is going to get a pullback from here. But, could it do something wicked and rip into the record high and then fail first? I don't know. Volatility has picked up. Guys, we're heading into the best parts of the year where that volatility is here and will be lingering for longer. So buckle up. Buckle up and plan accordingly. So not much guidance for you on this one, Pete, today. I mean, look, 29.78, 29.81, still a pivot I'm watching. A break below that, in my mind, would be bearish, 100%, like, not 100%, what am I saying? A 50, move down to that 618 line, rather, at 29.58, 29.60. I think that would be a fair move with a pivot below that region, but that's my zone. That's my zone. On the upside, this was the first target. This was the first level to look for resistance. I just don't like that there's no slope here. It was more convincing, for example, Pete, if we hit it here, right, where it confluenced on that slope, because it was very encouraging to see that gradient was holding. So, but here, like, I don't know, it could pop higher first, then fail. If it moves lower, it still needs to get through this zone, this pivot, to get lower. So I just don't like the positioning of it. Just don't like the positioning of it. Again, if you put a pistol to my head, I'd say that you think it'd probably travel a little higher today, but I'd broadly be looking for exhaustion. Pete, does that help? Does that make sense? So that's the take here. He says yes. All right, cool. Yeah, it's seen cleaner days. Thank you. Hey, you're more than welcome, Pete. And I'm always being mindful of SPX, especially these days after that spout we had where it was so clean. I'm always mindful of um, trying to find new slopes, trying to find new gradients, trying to find something to give us more guidance. But on this one, it's just been all about the lateral levels. So play accordingly. All right. That's everything on my list. If there are any other questions or trade setups you guys want to review, feel free to throw them on the message board. If not, we'll go ahead and wrap things up here. A little risk on, risk off correlations playing out, it seems. Pooja says. Oil. Oh, Pete, yes. And Jay's asking the same thing about crude. Yeah, here's oil. Look, I was going to put this in the update yesterday, but I got so frustrated when I was looking at this because this break was messy as hell. So this pitchfork, we're going to scratch. Here's the last oil update. Where was our last oil update here? Dun, 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 dun. Crude. So we were traveling. We broke above the 100% extension. That ended up being the high. So when I published this on the on the 13th on the Sunday open, we said, look, it's making divergence into a high. Look for a pullback to buy. 53 is bullish in Val. If we get down there, look for possible entries. So it broke down, worked perfectly, sat into 53. We even got a bounce. But then what the heck is this now? We're just straddling that level. Just straddling that level. It's a former swing low and a decent pivot, or it was, and now we're just straddling it. So look, we were looking for the downside early in the week. We got it, but we never got the recovery. So it makes me think that this downside sitting at support here wants maybe to see another test of 5160, which, wasn't necessarily the game plan here, but something like this could end up playing out, a little consolidation and mini triangle breakout. Where it breaks, maybe spikes lower, goes for the low day close, 52.29, goes for a tag of that before recovering. I was under the assumption once we broke that downtrend here that we were going to see a larger breakout. So we were looking for this pullback to fail to execute a new high. So if this consolidation breaks lower, as long as we hold these lows, that still could be the scenario. And just to throw some levels at you real quick, 100 off the low would take you as high as 55.90s, 55.70s. That'd be a nice zone up there if we get it. But ultimately, I think the play is going to be the break or at least the test of a low and then failure there. So I'm looking for exhaustion, guys, on a downside break in crude. Ultimately, the downside, let me take a step back. I mean, we skipped a lot here. Ultimately, I think you get the downside break here. Much larger decline in crude. It's just that this zone that we talked about for so long at 51.67, 52.29 is still in play. Okay. And at the end of the day, the monthly opening range is still in play, right? Our assumption again that this rebound was going to get a bounce and maybe another even stretch just to get a 38.2 even would take you up as high as 55.69. So that's my, sort of outlook as far as like where I think this thing is going in the long term. Right now, this move here, again, this could spike lower and try to test 52.29, that low day close before return. By the way, that's the low day close from August. But ultimately, we were just looking for a bigger rebound on the longer term to sell that. Pete, Jay, Pete says, thanks, exclamation point, you're more than welcome. Jay says, clear, thanks, right on, guys. Right on. Love the feedback. So yeah, it's a very interesting setup. Unfortunately, the only thing, like I said, the only thing that's changing, the levels, by the way, from that update, let me take a step back. The levels are the same, right? Nothing changes as far as the lateral levels. The formation, scratch this pitchfork. It's no good. Watch this near-term consolidation. If we spike lower, again, low day close, 53.67 max or 51.67 max. And if it pulls back right off that, look for a new high to execute. Ultimately, again, we'd look to sell that. All right. Any other questions? Good thing you guys brought that up. I wanted to cover crude for sure. All right, so we'll wrap it up here, guys. Again, we'll look out for Jamie later today. Watch out into the close of the week. Again, there's not much data concerning it. It's going to be a lot of this headline nonsense, and then obviously we're heading into the final full week of October trade. Best of luck trading. You too, E-Man. Have a great weekend. I'll see you guys on Monday on the free session on Daily FX, and then right back here Tuesday and Thursday. Cheers, guys.